Good evening. The Australian share market has suffered its worst day in over 6 years, with tens of billions of dollars wiped off the value of our biggest companies. The huge sell-off was repeated across Asia in response to concerns the Chinese economy could be about to implode.
The losses were so bad, some clearly felt the sky was falling. The pressure on traders was obvious. It was carnage. More than $60 billion wiped from the value of our shares. The worst day since the global financial crisis. The market at a 2-year low.
In that situation, people will do what they do best and they'll go to cash.
The fall accelerated as soon as Asian markets opened and got worse as the day went on. Shanghai's market lost 11.5% last week. In early trading, it was down another 8% today. The stock market has always been a barometer for where investors think the economy's headed over the next 6 to 12 months. And so these big falls cause genuine fears about another economic meltdown.
I think any sort of signs of a crisis is a long way from where we're at the moment.
But letting investors wondered out loud if the sun had finally set on China's economic boom.
There's been a change. The change is that China is quite evidently growing much slower than even we had expected. The 7% number they put out is nonsensical.
The story in China is changing. China is getting weaker. And Australia is more susceptible to that than the rest of the world.
Most say the catalyst for the stock market fall was China's decision to devalue its currency, the yuan, to make its manufacturers more competitive. But the fright of a falling currency caused $190 billion to flow out of China, most of it landing in America, with its stronger economy and rising interest rates. One of Australia's best investors, Keir Nielsen, has made billions reading the markets. He says there's an opportunity, but maybe not just yet.
I'd be making a list right now of all those companies that I always wanted to own because they were magnificent businesses, and just set a price at which I'm now prepared to buy them.
And it wasn't just shares. Oil fell to its lowest level in 6.5 years, below $40 US a barrel.
You have falling commodity prices, collapsing currencies, and a weak global trade. So all that together is creating a bit of nervousness.
Our dollar is also at 6-year lows, close to 72 US cents, with forecasts it has further to fall.
We think it is wise to have at least a decent proportion of one's assets outside of the Australian dollar.
And the Nine Network's finance editor Ross Greenwood joins me live. Ross, how worried should we be?
Look, I think worried is, always one of those things that people do get concerned about these things because it's their superannuation, it's their livelihoods into the future. The truth is it may even have an impact on your job down the track as well. But the fact is panic does nobody any good. I'd suggest to you the markets probably have further to fall. Even now the Chinese stock market continues to fall late in its trading day. So the point is you've just got to wait until you see the bottom. There will be buying opportunities for those who are cashed up and ready to go. But the truth is that the stock market generally does tell something about the future of the economy. And right now it's not telling a very good sign for the Australian economy.
All right, Ross, thank you.